mean, do you think it's like $1 billion business?
It's not something I would put my funds money towards.
He's like, dog shit.
I think if you were, well, it's dog. But, I think if you're somebody who loves dogs and loves like brand and making people feel good, it's a great business to start a lifestyle. I bought my first cryptocurrency in 2016, 2017.
Oh, dang, that was early.
Bitcoin. Yeah.
Oh,
yeah.
nice.
He's like, you really did that?
Okay, so tell us, because Carson, you kind of introduced me and Ahk into startups, you know? Mm-hmm. And you're definitely like a critical piece in my like university learning like experience, you know? Like I honestly don't know what I'd be doing if like you open this different type of side. Like literally I was like a journalism major to start, and I'm like,
I literally was talking to Murph.
Gotta do entrepreneurship.
I was like, my understanding of startups was like iCarly, you know how like they make like the crazy like dog apps or whatever, and they're like, I made $1 million making this like dog food app. Like I always just thought about it like that. So I was like, man, like is the startup world as Looney Tunes as it seems? And then I like started getting into it. And I was like, man, this is crazy. Because then you put me on, you're like showing me the ropes. This is what it's about and all that. And honestly, like I would never be interested in technology or anything in that sense. Like I was going in as a business major, and then I pivoted to like CS, and so it's like it literally changed the whole trajectory of my life just through that introduction.
Well, for better or for worse. Glad I was able to get you into this drug. I don't know. That's a good thing. I'm glad to hear it. I think it's very much like, it's the gift that you keep on giving. I had a similar, somebody that I knew in school, I was kind of like hustling, looking to get onto my next thing, and somebody was like, you should look into startups. So, I mean, yes, there's always somebody that gives you that tip down the rabbit hole, so I'm glad I could be yours.
What was the steps after that? You know, you had this mentor, and then like, how did you keep pushing yourself? How did you get to the role of Techstars that you used?
I mean, the story is multi-layered, as I'm sure. I mean, I feel like with so many people in startups, there's sort of this common underlying like need to go accomplish something that's driven. Usually it's some deeper psychological thing. I think with me it was growing up in an environment where there wasn't a lot of money, and just seeing like that stress on my parents. I kind of knew at a young age, like, okay, I got to figure it out, because it's not necessarily a given. And I think that was sort of at a young age kicked me into actually looking around to see what's out there. Like I was a weird kid in 8th grade. I had like a really long list of like potential careers. And then in high school, like I said, just the story, like I had gotten into trading stocks, as you do as a freshman in high school, and was really just looking for a bunch of excuses to make money at the time. And, I was one of those weird kids that sold candy and mowed lawns and just did a bunch of stuff like that. And then, I kind of got to see like my first take of like, you can scale businesses, and it doesn't just have to be 1 hour of work equals 1 hour of pay. I had a lawn mowing business where I would hire people to do that stuff, and I would see the money come in where I don't need to mow every single lawn. And then, I just had a friend who was like, hey, that effect you're getting of scale, like you could do that times 1,000 in startup world. Of course, that ended up not being true at all. That was kind of the entry point, but then from there, I was very lucky to have a mentor in my life who was a venture capitalist, and I got into things like Shark Tank, and realizing you can judge other people's ideas with not your money. Sounded like a really compelling career, and so that I just was really lucky at a young age. I knew what was out there, and I knew what was available to me. It took me a while to really realize this is what I wanted, and I should go after it, but that's kind of how it all started.
Dude, I had like a very similar experience in the sense of like growing up, I didn't even know like businesses or starting a tech company was even a thing, just because, like where I grew up, like it was either you were a doctor, lawyer, like that's it. Like those are the only two things that if you're trying to be ambitious, you do that or you do a trade. And like being exposed to this world, I remember I was like, oh mom, I want to be a startup founder. She's like, what? She's like, what is a startup founder? And I was like, because at first when I was going through school, like I was like hustling, like similar to you. Like, do you guys remember like silly bands, like the little like shaped, like I would like form them into different like shapes and like different things. I'd be like, oh, this is limited edition. I swear to you, this is something crazy. And then I would like sell them for like $6 to like other kids. I remember getting suspended for it, and it was like that was like my like entry point to the world of entrepreneurship. It was like very similar to how you got, kind of got interested without actually knowing you're in love with it.
I mean, I love that you kind of got into it from what I don't know what you called it, but like it's an unorthodox entry point, right? Like we definitely didn't grow up in like Silicon Valley. Maybe you did, but you didn't grow up like in Silicon Valley. Like it's in the water. That's the expectation of you, right? I mean, I think anybody who comes from a background where money. I don't want to say money was super tight for me. Trust me, there's people who had it way worse. It was a stressor in life, and I think when you grow up in that environment. The family wants you to optimize for safety, right? And startups and entrepreneurship are certainly the exact opposite of safety. But no, that's cool. I think it is sort of this weird cuts through culture thing in the universe, and that like entrepreneurship can obviously be a force for a lot of greed, but it can also be a force for a lot of good. And for good reasons or bad, I think that just gets a lot of different people from all walks of life interested in it, whether you grew up in Silicon Valley and have known it your whole life, or discovered it when you were in college and you had no idea about it before.
Now, I wanted to ask you a little bit about like your opinions on like the startup ecosystem and its growth or like in Seattle specifically, and its growth over time, because a lot of people, when we talk about like Seattle, we think about these big tech companies and we think about the talent in that aspect, but like no one's really thinking about starting something here. A lot of like, I mean, of course there's people starting stuff out here, but it's like, I think the first thought is New York, Boston, San Francisco. Of course, I don't know why I didn't list that one number one. But I mean, how do you like being in Techstars? How did you see the growth of that, and what are your opinions on it?
So maybe we just to catch the audience up on who I kind of talked about kind of how I got into startups, but kind of after that I went to the University of Washington here in Seattle. Was involved in a couple of different entrepreneurship initiatives there. Started, I'm not sure that you could call them companies, but certainly projects that had their own website off the ground. Did a couple things there, and then in doing those things, was hired out of undergrad to a company called Techstars, which is a large, call it startup accelerator that caters all over the world. And then from Techstars, I joined a venture fund. So that's just a little background on me. And so for context, I really started paying attention to the Seattle scene back in 2014, 10 years ago, believe it or not. Yeah. This is kind of back when I first knew I wanted to get into startups, and my mentor was a VC here in town, and so I had as a 15-year-old in high school, I had a lot of access to what was going on here, and not that I could really gauge what was happening then, but it definitely had this very corporate feel to it. Even the startups, right? Like, there's a couple of big startups in town that I particularly spent time with. Well, I think one of them was PitchBook, and another one was a company called ZipWhip, which was later acquired for just under $1 billion to Twilio. And back in 2014, when I was talking to those founders, it just felt very. People were still wearing collared shirts, and people were still kind of approaching meetings with a memo write up. Like, it did still very much feel like, even though I'm in the startup's office, like, I'm talking to people who've been doing this for a while, and I always thought that's just how it worked. And what I'll say, as time progressed, I think we started to move away from this like corporate Amazon-like jargon to adopting more of a Silicon Valley mindset of, I think COVID was obviously a huge catalyst with people working from home and seeing their options packages, disintegrate in front of their eyes. Like, there was sort of just the incentive to start a company, but a big thing that I've seen is just the the Silicon Valley mindset diffusing all over the world, and Seattle is certainly one of the places affected by it. So that's kind of the first observation, is just seeing the mindset and mentality around startups going from like it's something that is, obviously I think Silicon Valley is super risk on, go for the crazy ideas. I think Seattle over time has kind of been a layer of risk abstracted away from that, where it was people who've come from Amazon who've seen, or Amazon or Microsoft, any of the big companies here, they've seen the inner workings of a problem at the highest degree, and likely they had a manager at Amazon or Microsoft tell them they can't do that on their own, and that's what started a company. And now it is, obviously some of that still persists, but it is much more like, hey, I'm a college student, hey, I'm somebody who is an entry-level software engineer at one of these big tech companies, I saw YC's thing, I saw Techstars thing, I just want to be an entrepreneur and start a company. So that meant just the culture around it. I think that's the biggest shift. But, I think what comes with that is there's more money. I think now most of the deals done in Seattle are outside capital. That could be good or bad, depending on how you look at it. I think 10 years ago that was certainly not the case. I would say generally, look, the how I would characterize Seattle's entrepreneurship scene is it's a lot of amazing talent that's locked in by golden handcuffs, right? Those big tech companies really know how to pay people in ways that make them not want to, make them forget about their dreams, for lack of a better term. But so I think, Seattle is on the precipice of something huge. I think it just requires some degree of incentive or something to unlock that talent, to get it outside of big tech. Because I think if you talk to any of those major engineers who are pulling, 8-figure comp packages, I don't think, I'm certainly not one of those people, so I don't want to project, but I don't think those people at that point are terribly motivated by money. I think if you can give them a lower risk opportunity to make a huge impact and, the ability to lead something, my guess is that something good can come of it. But I'm sure there have been people who've thinking about this problem for decades who've thought similar things, and it hasn't panned out.
Do you mind taking a step backwards? Like, do you mind explaining the difference between like an accelerator and a venture capital firm?
Yeah.
Because I think that's something that like a younger audience, a new audience might get like confused.
Yeah.
I always understood like I consider accelerators more as like teachers that are willing to like kind of guide a student, a new student like towards this path, and then venture capital firms are kind of just like a bank at the end of the day, but you may have your own opinion.
Look, I think if you try to put anybody who operates, whether they're a VC, whether they're an accelerator, an incubator, like there's no way to put them in a box.
They're all different.
There's no.
They like to operate in a different way.
As much as Twitter might try to make it seem like there's very little homogeneity in that world. Everybody operates differently. I think how we saw it at Techstars, and Techstars is strange in that we take some pretty aggressive terms, and but in exchange for a very hands-on experience. It's almost in between an accelerator and incubator. But I would say there's sort of 3 terms for early stage funding partners. That's incubator, accelerator, and venture capitalist. Incubator, I think of this as like the think tanks of the world, right? Let's just get really talented people together. Maybe they have an idea, maybe they don't. Let's stick them in a room, pay them a bit, give them some capital to test out ideas. But really the goal of an incubator is to walk away from the experience having at least a pretty fleshed out idea of a business, and you almost have an opportunity in front of you to continue validating and building it, right? So to me, incubators, that's where ideas are born, right? Accelerators are, it's in the name. They take something that's already there and they push it forward a lot faster, right? They accelerate it. So to me, an incubator, you finish that experience, hopefully having an idea and a team, and then maybe you could go apply to an accelerator afterwards, right? Because you already have the idea, you want to push it faster, push it forward a lot faster. And so an accelerator, I would say, is, I often describe it as it's a place where you go to get a lot of mental capital, right? So at Techstars, what we would do is we would find very promising entrepreneurs, invest in them, fly them out to Seattle, and sit them down with people who are experts in their domain in a very condensed fashion. Like we're talking 50 meetings a week, right? And the point is, when you're talking to those types of people, they can help you, sidestep mistakes that you're about to run into. They'll give you their worst stories so that hopefully you can avoid them. The idea is that you can get 3 months of, you can get 6 months of work done in a very, short period of time. So, one gets you started, one moves you faster, and then venture capital, I would say, is layered on top of that. It's sort of the bucket for when an idea seems like it's going to work. That's where you really juice it forward and turn it into a business. So, to summarize, incubator, you walk out with an idea. Accelerator, you walk out with a product. Venture capital, you walk out with a business.
I like that.
And so venture capital, money, everybody thinks it's like this, that's what you're going towards. Let's go for the big fundraise. Let's get on TechCrunch. Money, I think, can be a dangerous thing if the business isn't ready for it. You have so many examples from this last cycle, but I think the role of a venture capitalist in how I see my job is not to play judge on startup ideas. It's to figure out which ones where can one being the business plus one being my capital equal 3, right? And that equation is not always straightforward. So to me, it's a good summary is incubators, you get ideas; accelerators, you get products; venture capital, you get companies.
Sweet. I like that progression. That's easy to understand.
Yeah, do you think as of recently, we've seen some crazy ideas basically funded for AI related startups. Do you think we're in a sense? I feel like it's been a general consensus that it's a sort of bubble of crazy valuations, and how do you see those and how do you evaluate that versus it being just way overly valued and just an API endpoint to ChatGPT or something like that, because we saw a lot of those coming in and still get evaluated at a crazy level. Yeah,
anybody who's going to sit here and tell you what's happening, we have a good saying at our company, which is, you typically want to avoid the loudest person in the room. Another saying is the people who are the confident but wrong type. So, the point is, who knows? I think the way I think about it is, AI, generative technology as a whole certainly has this paradigm shifting event. I honestly think of, AI is, the commodity that it's creating is intelligence, which is not something that's ever been, you've never been able to manufacture intelligence before. And so that alone and the likely prospect that we're going to end up creating something that's smarter than humans, which we've never experienced before, that alone, I'd have to think there's going to be some amazing stuff created. And so to me, it's you can't not play the game. Now the question is, there's a big question on how aggressive should you be? I think there's a real concern around this first, just like in the .com era, the first, the people who go out into the woods first are the ones who get slaughtered, and so you have this question of do I wait? But I think the technology's changed, the market environment's changed. I think the glorious part of operating in the realm that I do, which is at the pre-seed earliest stage, a lot of that stuff really doesn't matter. It's almost entirely on the founder and the entrepreneur. So that's why I focus much more on the intangibles of who's the team, what set of experience have they gone through to make me think there's a good likelihood that they could build a legendary company. So, but to answer your question around AI stuff, to me, it's something where you can't be on the sidelines for. It's I'm not sure if you remember back. I guess you wouldn't. I don't. I wasn't alive when this happened. But my mentor, when he got started in the venture capital business, they had something called internet-only VCs. Right? You had VCs that were funding a bunch of stuff. They were sort of the main funders of the semiconductor industry. Right? But the concept of being an internet VC was kind of novel, right? It was kind of being a Web3 or an AI investor. It was sort of I don't know if this internet thing is going to take off, and obviously we live in a world dominated by the internet. So I imagine it's going to have similar effects to that degree of we're going to be living in a world where, at least half, if not more, of the global population is reliant on those tools every day. Yeah. So, you have to play the game. I think being too aggressive on any one point in time is probably a misstep. Like, on the one hand, is there things like GPU costs going to go way down? Or is there things like new paradigms, techniques going to emerge that make the old ones completely obsolete? Sure, but there's also going to be businesses to the order of $1 trillion minted right now. So, you, in my opinion, you probably shouldn't. You should probably eat that cost of making bad bets and hope the ones that you do make that are good pay for all the rest of them. Just like the business model for venture capital all the time.
So how do you sift through necessarily the bullshit of the market? You know what I'm saying? Like all these what are some key things that allow you to be like, all right, I believe in this founder or this team, because I feel like a lot of times they can throw a ton of technical jargon just to kind of get those buzzwords out there and be like, we're at AI Web3, I'll just throw everything out there.
Yeah, I mean, look, I think for anyone who's watching as an entrepreneur, if you can't speak clearly, if you throw a lot of buzzwords out and expect that you're going to fool the audience, that's just not going to work for you, right?
Not getting past Carson.
Yeah. And it's not because they're smarter than you. And look, I think this is something that a lot of entrepreneurs get wrong at this stage, is that it's, when you're talking, and to be clear, this is for pre-seed and seed stage investor. When you're at Series A, Series B, the rules and the rubric changes. But, when you're talking to me, the idea matters, the technology matters, but I'm making a 10-year-long bet, right? Yeah. Most of what you're, whenever your consultants are doing, you're just kind of cash flow. Most of it comes in at the terminal value, right? Not in the interim period. So, to me, when I'm evaluating a business, I'm not sitting there too hard over what's there today. If anything, I'm looking at what's there today as a reflection of the team. What are they able to come up with? How quickly can they move? Those types of things. Very rarely am I looking at any architecture diagram or anything thinking this is going to be the business and what they will live and die based on what's here. So all that's to say, I am evaluating somebody on their long-term potential, right? And so when I have an entrepreneur coming up to me with even if they are the most technical people in the world, and of course, if you were a research scientist at OpenAI or you've really been in the weeds of this stuff, you'll get a little more forgiveness for this sin. But whenever somebody is coming up to me and saying stuff that I just frankly I don't understand, that happens a lot. I'm not technical, but if they can't explain to me in a way that gets me excited, in a way that is at least able to help me as a non-technical person see the magic of what they're doing, I get really worried. And I'm not because I don't think it's there, they don't have the ability, but if your job as a founder, CEO, is to be a magnet, right, for the next 10 years, whether that's attracting more investors, attracting the best employees, getting customers and people to believe in you when there's no real technology there yet, you need to be able to pitch the future and sell the vision, right? And I don't care if you're the most technical person in the world. If you can't get other like-minded people to get excited, and you're going to need people who aren't just engineers building a company. You're going to need people that have my skill sets too. If I can't get compelled or excited, at least a little bit, I get really worried. Just because it's a reflection of their ability to do that over the life of the business. And if you don't have that, it doesn't matter what the technology is, right? There's not going to be a super compelling company, most likely. So that's sort of just the cop-out answer of look, I don't necessarily, to me, it's not necessarily an evaluation of the technology, it's an evaluation of the team. And, how they present an idea is a huge part of that calculation. But when it comes to actually when we're getting into, RAG or all these different, emerging technologies, you do need to know that stuff and be able to have conversations, right? I learn a lot. I spend a lot of time diving into content, and I certainly don't claim to know how to build this stuff, but I at least like to get to a point where I can go deeper in conversation with an entrepreneur. And usually what I found, the people who are really, really serious about the technology piece and who I found to be just like really good, like, again, like good is subjective at this point. Like I would argue somebody who's a really good technologist for startups is somebody who can just break and build shit really fast, right? Not somebody who's setting up the most scalable architecture. So, you know, I can pick it up just in hearing about how they talk about how they built it, how they, you know, I ask a lot of questions around like, you know, why do you think this feature was better than this other one? Like, why did you focus on this? And understanding like the decision making in the product development cycle. I think, you know, you're never going to ask a single question that, you know, uncovers something, but I think it's a pattern over time as to how somebody reacts to your line of questioning around, you know, how did you make this decision? How did, you know, why do users care about this? And, you know, sure, they'll throw some technology stuff that I don't understand, and, you know, I'll have to deal with that. But like I said, I think if you're leaning on the technology to make your calculation at this stage, you're missing out on some critical factors. So,
I wanted to talk. So understanding, like, to give background, like I know you were a big proponent of like the Filecoin cohorts at Techstars, which is like, if you want to like explain a little bit more what Filecoin is, and then I'm gonna like dive into it.
So we partnered with an organization called Protocol Labs, and they're essentialized a R&D laboratory for cryptographic and decentralized protocols, and they're pretty much solely focused right now on decentralized storage. So I guess the best way to explain that is taking centralized storage. So if you look at any of the major cloud providers, you use their services to host and run your applications. A big component of that is actually storing the data that your applications use, and you use their servers to do that. I don't know what Azure's are called, but AWS and Amazon call those S3 buckets. And pretty much anyone in cloud or technology knows what I'm talking about, hopefully at that point. But that's all done with Amazon-owned servers and that people buy into to use and store their data. Filecoin is essentially a decentralized protocol where it takes a bunch of, it's similar to Airbnb, where anyone can sort of host their property. You can take your disk drive space and host it using this protocol, and essentially become an Airbnb for storage.
Yeah. And so with that, you guys were investing into the future of other Web3 companies in partnership with Filecoin.
Right. So if you think, again, using the same analogy, you know, you have technology companies building on top of Amazon to host their applications, right? And, you know, every application in the world needs storage, and so, you know, Amazon could do something similar. But Filecoin, again, their goal is to expand their base of storage, and the best way to do that is to get people actually using the storage that's already on there. And, you know, the idea is if you invest in companies who are building technology that needs that storage, you're just going to improve the ecosystem overall.
Now we saw the correction of like I know it's like there's some crazy like one of my friend's dads is like knows nothing about crypto, and all he's talking about is like, man, I was telling you this Bitcoin thing about to blow up, this Bitcoin thing about to blow up, working more than the S&P 500. And it was just like there's always, now we're back at the craze of, you know, we're seeing the Bitcoin numbers climb up, and now people are in the belief and hype. I mean, where do you see kind of like any? I mean, I don't know. I want to make sure to ask you this, but I was like hearing another podcast. I know you started something in Web3 before you went to Techstars. What are your thoughts of everything in Web3?
I had spent some time building and just exploring the space just through a project, and basically out of college, me and one of my college roommates and their dad, who was a Microsoft technical fellow, had worked on something for a little bit, but it went nowhere. So that's kind of just how I dipped my foot into it. But, you know, obviously I invested in a lot of companies who had worked in that domain. In terms of, you know, what I think about the space, I mean, again, it's one of these areas that is totally orthogonal to what's happening elsewhere in technology. It seems like, you know, I think like when you see AI or VR, like you really see the convergence. It can be a little harder to see where blockchain fits into that, but I think it's there. But it certainly runs counter to it. Like to me, it's like you look at all those other technologies, you know, VR, AI. It's very clear what they're disrupting, Crypto, you can see like, okay, money kind of, but it's also not.
Just
It's like a no man's land.
Just a stock and go.
Yeah,
that's all people think about.
Honestly, I think like one of the most powerful things about crypto is because it has these amazing techniques that enable you to see, okay, states, like everybody's on the same page about what the truth is, and I think that's a powerful piece of technology. Largely, honestly, I think the biggest disruptors are major institutions that rely on trust, and because of their scale, that gives them their trust. I think with this technology, you kind of push that out to anyone who wants that, because it's technology that manufactures the trust versus the scale of history. But in terms of where we are, I mean, I'm definitely don't want to be the proponent for Web3, but from what I've seen, I got into this in the last cycle, really. I dipped my toe, I bought my first cryptocurrency in 2016, 2017.
Oh, dang, that was early.
Bitcoin, yeah.
Oh,
yeah.
Nice.
He's like, you really did that?
Trust me, you talk to some people, and that's like, you're late to the game. So that's when I first, actually kind of learned about it, but I mean, I didn't really start, I didn't even read the Bitcoin white paper until 2018, 2019.
Bro, I remember when how I got into crypto. I remember mine was Ethereum, and it was because we were I'm a nerd, so we were playing World of Warcraft, and pretty much to hustle people in raids and stuff like that, we would request Ethereum, and that's how we would make those transactions.
So it's I got into it just by reading and trading, and other people I know people have gotten into it because it's they like to gamble, and the sites they use won't let them gamble with regular money. So
I remember I was the ones that I tapped in first was Ethereum, Litecoin. I'm trying to think, and Solana.
There's so many of those weird coins I forget. I forget Litecoin used to be the big one.
Yeah.
Litecoin. I remember people were Litecoin is like Bitcoin but way better.
Bro, I feel like there's always one of those. I know one of my friends I was talking to him. He's like, dude, have you heard of Trubit? And I was like, what is that? He's like, it's not on the Coinbase, but you can do it if you go through these sketchy websites.
Yeah.
And I promise you to the moon. I'm like, all right, bro, that's definitely not what I'm about to do.
Yeah. To answer your question though, where are we? I think you kind of almost answered it in a way. It's when you start having people who know nothing about this start asking you and telling you I don't care what the asset class is, whether it's cryptocurrency, startups, anything. As soon as people who are your mom or your bus driver or something starts chilling you stuff, that's when you should maybe be a little skeptical.
Dude, my uncle, he talks like it's the gospel. He knows nothing about tech, and he's like, oh, I know this one's gonna hit.
Yeah, well, I mean, look, you certainly have the speculators, and that's good and fine. There's a place in this world for everyone, but you also have the people who are really, I certainly fell into this camp initially where I was down with the system, everyone's cheating us, we need to rely on technology to do everything. So whatever gets you into it, whatever gets you learning and paying attention, I guess, can't be a bad thing. In terms of where we're at, back when, like I said, when I got into it, it was all just far off ideas. What could this be? What could Bitcoin be? What could Ethereum be? Nobody was actually using it in production besides trading, really. And so, back when I first got into it, it was definitely this huge speculation thing that's way off, and I viewed it like a startup. If this has a great vision, it could be worth something huge, so I'm just going to act like all this money I'm putting into it, I'm spending at the casino, and I just lost it. Hopefully, maybe I'll come back 5 years from now.
The NFT craze was my favorite. I remember some of the guys, they had the wildest NFTs, and there was no value in it. I remember there was one of my homies it was ponies. You literally would it's race ponies, and they would buy them and then watch them race online.
Yeah.
It was
So that kind of was the biggest difference between sort of the cycle that got me into it, which is the 2017-18 cycle, and sort of this last one where NFTs kind of came on the forefront. Like I said, that first one, it was all speculation stuff that was way in the future. You could never really touch it. All you could see is something on, if you had Coinbase at the time, on your Coinbase account, or otherwise how you got it. this last cycle with the NFT craze and all the fraud that went on, I think a lot of that, the reason why it got so frothy there is you actually did get to see some of the technology emerge and start to play out. Not entirely, right? It's not like the world is fundamentally altered because NFTs exist, but you start to see some behavior that I think really actually point to, the magic or the despair of crypto, depending on how you look at it. Like, everybody talked about those dumb monkey pictures, and trust me, I was one of those people where I was like, I saw the price of those things, and I was like, oh, we're fucked. Like, there's no way that anyone's gonna take us seriously. But before all that started happening, Yuga Labs, the company behind that, is actually a really interesting story. They issue these tokens. There's only 10,000 of it, and the reason why people got so excited and why everybody aped in with all their money is because this is one of the first early examples of seeing like community activation with the power of ownership. Yeah. Like the Yuga Labs owners, without the Yuga Labs interfering, they created their own events. They created their own sort of music and sports teams. Like, they did all this shit because they were unified behind this concept of, shared ownership and this scarce commodity that they could build a culture and a brand around. And, I think it was, look at the NFT price chart and you'll see how that went. But I think it gave a really powerful example of what brands could do to when you have your community bought into something that you share that could push you forward together. And why does that matter? And I think it was really destructive for a lot of people. You had a bunch of other different NFT companies emerge to try to get some of that success. I think there was a stat, 80% of the NFTs created were a flat-out scam. It's because people saw there was a group of people who got too excited over this, brand and culture building effect that you get from this technology, and they took it all the way up to 11, and of course the market just faded away overnight. And that's what happens when you have unhealthy market dynamics. But I think what it showed is it showed that this type of technology can actually alter the way that people change and interact with brands. And now you're starting to see Starbucks and Nike and Walmart and Amazon, all these huge brands kind of quietly going into this technology. Like, I'm sure some of those names you guys had no idea were actually getting into this space, but they are.
I knew Nike was
Nike like with Ronaldo or something. Yeah. Like, they were giving out cards. Like, Justin Herbert was on there. Random stuff.
And I think it'll go beyond the celebrity famous person is just looking for a way to make money off of their likeness into something that is like, what I'm really excited about is the prospect of like new companies getting born, similar to like Yuga Labs. Probably stay away from the monkey thing. I think they've beaten that horse down. But
I mean, I feel like how I see like the whole like NFT space, or what it showed us was like the fact that it was kind of like fashion brands. Like, there's gonna be all the fad ones, like all the ones that will be there for just a little bit, and then no one's really rocking with them. But then there's gonna be the ones that are the culture breakers, where they're so tapped into the community and their community is so strong that it's gonna push it forward.
I mean, I'm still waiting to see like what is the obvious benefit to consumers. Like, I think the benefit to businesses is there. I mean, when you look at Yuga and it's like you have your own users organizing things to get other users to stick around, like that's pretty powerful business, right? Like, to me, and there's a lot of other different examples. Obviously you get the incremental revenue, and also, so to me, it's like we've proven without a doubt this stuff is really valuable to enterprises and brands. I think we have yet to prove out this is why you as a consumer should absolutely love this type of technology. I think, when it comes to gaming, that's probably where my money is in terms of where we're going to start to see that really emerge. Like, for me, I'm an investor in a couple of crypto games projects. Like, I was always super into FIFA and Madden. I loved building up your own team and franchise.
I wasted so much money on those
games. Exactly. You wasted so much money. I think NFTs provide a substrate for you to play those games, but not waste your money necessarily. So that's my bet as to where we'll start to see the obvious value on the consumer side. But the point is, I think where we are in the cycle is, we've proven with this last one that businesses can really get a lot out of it, and We've also proven how dangerous this stuff can be and how there's likely a pretty strong need for regulation in a lot of domains. But I think once you clear that, once we have a really strong regulatory framework for how businesses should operate, it's a lot of people look at regulation and cringe, depending on what it is. Yeah, I look at it as when you have a totally new thing, it gives a lot of legitimacy to it and enables money to flow into it and it gives people a sense of, okay, hey, I'm not going to just totally get screwed by this thing, which ultimately drives adoption and users. So I think it's a good thing. So I think in terms of where we're at, I think I'm pretty optimistic. My optimism tends to be inversely related with crypto prices, so I'm a little right now okay, Bitcoin is just railing all-time highs. I'm a little okay, we probably have another cycle or two before we're truly realizing the vision that I have in my head for the technology. But I think the main thing is people are learning about this stuff. Some of the seriously out of the last cycle, seeing some of the talent migrate into this space blew my mind. We're talking, PhDs from MIT, from Caltech.
Wow,
people who are really have the ability to work on some world-changing stuff or choosing to work in crypto. And, I just think with stuff like that, it's very hard. I am, so many people ask me when Bitcoin was at 13K after it was at 70, oh, do you think this is the end? Do you think this will ever come back? And I was without a doubt, yes. So, I think there's going to be some amazing stuff. Is it going to be manifested in the form of tokens that we can all just spend money on without really knowing what they are? Is it really going to be a world where we all have to get wallets signed in and you have to do really weird, complex stuff to continue using them? Probably not. And so, is there any one thing I'm sitting here today that's oh, you're going to make so much money doing this? No. But I think long term, if you're somebody interested in technology, definitely spend some time learning about the Bitcoin and Ethereum white papers, look at startups, because I think this stuff will start to turn around. The really interesting stuff about cryptocurrency is that, in crypto projects in general, is it's a type of thing that has its own momentum curve to it. Meaning, you have the obvious factor of it's very hard for a government to step in and say no more cryptocurrency, right? They have to do some pretty amazing stuff to do that. But I also think it's a type of technology where you can find pockets of where it works, which is hard. It works really well, and so for example, blockchains for verification, that is sort of the standard in a lot of places, and you wouldn't even realize it. So
verification as far as licenses go.
Sure, who owns what, almost so many of the supply chain goods that we have, making sure, okay, this piece of this input, this raw material input, it's this many days old, it was shipped from these ports, so many of that stuff is all done on blockchain. So because it's just a vastly superior technology than a rules-based system where you had a lot of access and gated permission issues, that kind of stuff.
I guess I wanna tap into your investor side. So we came up with a couple of startup ideas, and then we call them this dog shit or good shit. So
dog shit or good shit.
And so if you fuck with it, you tell us good shit, tell us why. And dog shit, tell us why as well. So
well, I wanna preface this by saying there's this common thing in the industry where if you're talking to VCs always talk to each other because they want to share deals, they want to get perspectives on a company that they're looking at and stuff. There's this general rule of thumb that's if you have a company that you met with or a company idea that you come across and you share with your VC friends and everyone thinks it's a good idea, it's the last business you should invest in.
Oh, okay.
Is this concept of if everyone thinks it's a good idea, there's probably something fundamentally wrong with it in that, it's such a good idea that people with a lot more money than you think it's also a good idea, and they're going to put money towards the idea and drive your margins down to zero. Or it's a good idea that just doesn't work. Have you guys heard the Tarpit idea?
No.
Okay, I encourage everyone to watch the YC videos on this because they're quite good. But the tar pit idea is just simple concept. It's like when you think of like a tar pit out in the wild, right? It's just big, black, sticky, rubber-like substance that
picturing a bunch of elephants.
It's when you see it in cartoons or how it's depicted, it's like this black with a bunch of skulls and dead animals. But so the reason why tar pits are so dangerous out in the wild is like when you're in the desert, it looks like water. It looks like an oasis, right? It looks like a safe place to go. But the second you start to drink or you get close, you'll get stuck and killed, right? And you'll get burned.
Is it not that obvious that it's a tar pit?
Well,
I thought it was pretty. I don't know. I was like,
I get it. Sorry.
And so a Tarpit idea is like a startup idea that looks really attractive. There's no major competitors. Seems like there's a big opportunity, but there's something fundamentally wrong with the idea itself. Like a good example I'll use is
like it's too good to be true.
Too good to be true, maybe, but this example will help it. Okay. So it's like, how many times have you guys seen an app for it's like stuff to do with your friends or like restaurants to go eat at?
Right? Every college student that tries to make a startup.
Right, and usually college students are the ones who fall victim to this because people who are wiser have tried and failed and move on. But the problem with like let's just focus in on one, like a restaurant app, like think an app that will help you. There's so many restaurants out there. Google Maps is overwhelming. Put in some information on this app and we'll spit out exactly what restaurant you should go to and you'll never have to spend time looking for it again. It's like a lot of people have that problem. They don't actually know what is the best restaurant, what do they want for their mood right now. But the reason why nobody could build that business successfully at scale is not because the problem isn't real. It's a real problem. It's because it's an impossible to build solution. Not because the technology doesn't exist, but because there simply isn't enough restaurants out there to satisfy everyone every single time, right? And so, that's why you see every single app that has insane amounts of churn and can never make money. So those businesses will never work, and unless something fundamentally changes in the technology or in the business model of how you build that business, it will never work. Yeah. So, point is, to this exercise, I'm probably going to shit on a lot of stuff. And to any aspiring entrepreneurs out there, probably going to get a lot of people to shit on your ideas. Yeah. I would say that is level one. If nobody thinks your idea is dog shit, quit and start again. If you don't get at least a couple people saying your idea is fucking crazy, it will never be a big startup. You'll never succeed.
It's kind of like we were talking about this in content creation, there's a lot of people doing some stuff, right? A lot of people doing this kind of content, this kind of thing. But then, if you're doing that, you're just following the whole crowd versus, you got to do something that kind of sticks you out there, Well,
I mean, when we started doing this podcast, whatever, in January, we were, talking to people about it. We put out a first one, and people were like, oh, that's really cool, blah, blah, blah. And I'm all like, knowing what you just said, I'm like, no. Tell me what's wrong with it. Stop being nice.
So the difference is, are you trying to create a multi-billion-dollar corporation versus some content that people like? So I don't think the rules are.
You said y'all are scrubs. It's not the same shit,
But I get what you're saying.
No, we get what you're saying.
I think we're all kind of on the same page, which is look, in the world of startups where it really is a home run business, right? You need to create something that has the potential to be huge, and in order to have something with the potential to be huge, it needs to be a little different and something that people won't just naturally be like, oh, that's a good idea. Because if that is the case, you are either going to run into a minefield or you're going to run into a game where people have a lot more money than you to play it. So
I want to rewind just to one question before we get into this. Is when you were talking about it's golden if there's no competitors. I know by theory that's no competitors is a great thing, but at the same time, isn't that a red flag? Being okay, why aren't they?
So I take the Peter Thiel approach to competitors, which is the classic Peter Thiel approach is competition is for losers. You should try to be a monopoly every single time. Yeah, I think that is true. You don't want any direct competitors, but I look at competition differently. So there's direct competitors, which I would say you are running the exact same race with the exact same equipment, right? It's about who can run it faster. And then there's sort of competitors around a problem, right? And what I mean is is Ford competing against GMC, or are they competing against other horses, right?
Yeah.
So to me, I think it's really good to have other sort of problem area competitors. Like if you're building a car, it's good to see that horses were there first. There's a need for transportation, right? But I would not enter into a space to build another muscle car or something. I would try to do something that is fundamentally different. Even if it's a car, right? Like what is a fundamentally different approach that I could introduce to the market space? Because otherwise it's a game about who can be clever, faster, optimized better, and that's a really hard game to play. Like, some people can play that game really well, and if you can, great. But I think it's a lot easier to just create something that is totally new and transformational, and because of that thing, because you have some real counter-positioning dynamics, or you just you're playing a different game. That's how you win in competition. So to answer your question, I think it's good to have competition at the problem level to validate it's a real thing, to your point, but I don't think it's good to have any competitors.
So in the problem level, but not the very much like the solution level, where it's like you guys are building similar solution with like the slight tweaks.
Features.
Yeah.
Sure, yeah, I think that's the way to do it. But, I don't want you to think that it's at the product level, right? Because, it could be, like I look at any of the big Elon Musk companies, they're different all across the stack. The product's different, the way they manufacture the product's different, the way that they architect the business is different. Like, I do like this concept of going 0 to 1 a lot. Like, I encourage everyone to read the 0 to 1 book. It's quite good, but I think the big takeaway there is like to if you want to minimize your risk in terms of building a startup, you want to come up with something that is fundamentally new and transformational, and in a lot that's counterintuitive, especially today when we have so many people. It's like do the lean startup thing, go to a space, like do all the sort of MBA 101 analysis, build another sort of application layer piece of software that is similar but different. Again, like it's all perspective on what games you're playing. If you're looking for what is the easiest way for me to make $1 million or $10 million, like that's probably the way to do it. But if you want to build a legendary company, that's probably not the way to do it. So that's generally what I mean by that.
Bringing the MBA or like I don't know. I'm a hater of this, but I think like studying entrepreneurship is like a crazy concept. Like I feel like you have to be in the weeds. You have to learn kind of like what it's like to build. And maybe this is just like I'm very opinionated in that sense because like I like to build like libraries and I like to build like little nicky-nacky projects. But that's how I was able to learn. How do I understand a customer? How do I understand what's a good product out there?
Yeah, I actually will take the other side of your bet. I think you're right. Like, what are the ingredients of an amazing entrepreneur? The biggest ones are always going to be what is that really unique insight you have on a problem space that enables you to build something that's
like
zero to
immense curiosity.
Yeah, no MBA class, no entrepreneurship class is going to enable you to do that. Like I totally agree with you on that point, and that's by far and away the most important point. But it's funny. Like one thing we really look at in entrepreneurs is like, do you understand the game you're playing?
Yeah.
Right. Like. Another way that you could say the same thing is like, do you understand cause and effect, right? Like, don't get me wrong, somebody who just knows how to go 0 to 1, build products that are totally disruptive and transformational has a better odds of creating a legendary company than somebody who just only did entrepreneurship classes. Like, that is will and forever remain true. However, the person who knows how to go 0 to 1, but also knows the norms, the behavioral standards.
What are the patterns? What are the things? Because I feel like if you learn from someone that's done it, like from a mentor and stuff like that, you're much more prepared. So I see what you're.
Yeah. So to me, I don't look at it like no entrepreneurship class is going to teach you how to succeed, but they'll teach you how to not fail.
Yeah.
So
I didn't really think about it like that. Just me coming from like a buildings perspective, I'm like, I don't want to always be in that like analysis paralysis where I'm like overanalyzing anything and I'm not doing anything.
Yeah, I think the entrepreneurship literature out there is pretty like these days is pretty good. Like I do still I think it's there's a lot changing and there's a lot more entrepreneurship literature out there, but lean startup is a great way to discover new ideas. Not necessarily the best way to build businesses, to be clear, but great way to validate problems and ideas. It's as a business owner, even if you are a total technology nerd, you do need to understand how financing works. You do need to understand how, what are some good practices for hiring and firing and all that stuff. Like it's just, those are little optimizations, but I do think it matters.
I mean, I gotta give respect because I came in as someone that's technical, and I like to build, and I like to just see where projects go and how many people can I get using the product. I used to think the business side, that ain't shit. I can do that shit easily.
Yeah.
But then as I started trying to be man, I don't get this finance stuff. I don't get how to evaluate if I'm in the right market or if I'm doing the right thing or I'm following the right metrics. I was man, I gotta show my respect. I was not respectful at all.
You need both, right? For example, I don't necessarily I've taken a stab at starting companies. I probably will in the future, but I know that my place in this world is helping the really brilliant technologists of the world navigate capitalism. That's what I know my skill set is, and I manifest that by working on fundraising, by doing all this stuff that I'm doing. Right, as an entrepreneur, you're even if you're a really great serial entrepreneur, you're only going to go through fundraising at maximum 10 times in your life, right? Whereas somebody like me, I will see hundreds of financing transactions. So it's that is something that I'm very comfortable going deep on, right? You as an entrepreneur though, you're gonna probably to your point, right? I think I even remember telling this to you. It's you will always be able to pick up the entrepreneurship stuff. You never need a degree for entrepreneurship. You almost always need a degree for computer science. It doesn't work the other way. So, unless if you're somebody like me and you've kind of recognized where you sit in the world and what gets you excited, and if that happens to be business, great. I would say that's a great indicator to go to business school and don't listen to all your friends telling you get a computer science degree. But if you aren't there, if you're uncertain, if you're not sure what you want to do, I think it's a really good to minimize your risk. Go into degrees where they aren't two-way door fields, and what I mean by that is you have the concept of a two-way versus one-way door.
Yeah, the Amazon thing. We had a guy come on and he was telling us he was ex-Amazon. He was telling us all about
so similar analogy, one-way versus two-way door is basically a decision. You have a bunch of decisions where you could kind of go back on them. Those decisions spend as little time as possible on make mistakes. Then decisions that are one-way doors where it's kind of hard to unwind who your wife is going to be. You should probably spend more time on that to make sure it's the right.
Lock that in.
Make sure you get those right. So my point is learning about entrepreneurship is definitely a two-way door. You can revisit that whenever you want to, and it'll be kind of convenient. You can drip feed it. You can do whatever you want to. Learning about how to build software is something where you just got to sit down and do it.
Yeah.
You got to learn it right.
All right, so we got our first one. This kind of, you know what AG1 is?
I take a cheaper version of it.
Me too. I take a cheaper one.
Wait, what do you say?
And some superfruits.
I've never heard of that.
Yeah, it's I don't know. You just look up, competitors at AG1, and then it's lower price. All
right. So I saw this from someone on Twitter, but I saw it, so I want to get your thoughts. AG1 for dogs or cats. Because I feel this is kind of schemy because people care a lot about their animals, but ain't no way they're gonna be able to tell if this is working for their their animals.
I would argue it's probably like that for humans. I like.
True. He said, stop taking that bullshit.
No. As a user, I paid what? I probably pay $45 a month. To take greens powders, I'd sit here and tell all my friends, I feel so much better, I feel it's so great. It is true to a degree, but it's probably, in terms of, if here's how much benefit I'm getting out of it, this much is probably real, and this much is probably placebo.
Yeah, placebo's a strong thing, you know what I'm saying? If you truly believe it, your body
and so what are people buying? What is the job to be done for that product? It's feeling good about yourself and being able to tell other people that you're healthy.
I'm better than you.
And so
dog's on this shit, I'm on this shit.
So can that translate to a dog? Sure. I think a lot of things that when it comes to brand and perception that humans care about, they'll manifest on their dog. Probably not to the same price point, but I'm sure.
I mean, do you think it's like $1 billion business?
It's not something I would put my funds money towards.
That's good.
He's like, dog shit.
I think if you were, well, it's dog. But, I think if you're somebody who loves dogs and loves like brand and making people feel good, it's a great business to start a lifestyle. It's going to be the thing that you and 8 generations of your bloodline will never have to work again off of. Yeah. Probably not.
It's like, yeah, that's one of those little shit, bro.
It's probably not something you're going to get a lot of VCs excited about, but it's people would see it and be like, okay, there's something there.
I wanted to give you a thought. This is kind of like a side tangent. I'm going to dive into a couple more of the ones, but what are your thoughts of like this? I don't know if you've heard about like the move of like bootstrapping indie businesses. Like we've been seeing.
I'm so glad you brought that up. Because I know we got other stuff we want to talk to. I'll just say, unless you know your business is right for venture capital, right? And I would say some good frameworks to know your business is right for venture capital. It's not if you're building software, to be clear. Like so many people think, oh, I'm a tech company, VCs want to invest in me. That's not the calculation. I would say if it's something where like your capital is a strategic advantage to your business, that's probably a good reason to do it. So what's an example of that? Like if you're in a market where it's like kind of winner take all, I would argue ride sharing, and Uber at the time was like that. It was basically like they had data that said, okay, if we can get a rider to ride more than once with us, they're locked in. So it's very high incentive to just get people to ride with you more than once. And if they ride with Uber first, they'll stay with Uber for forever. So basically they're saying, look, it's okay to lose money on the first or even the second ride because we'll lock in that customer and have them for the rest of their life.
Word.
Anything like that, and you can scale that quickly. Anything like that, venture capital is probably great for you because more money means you can buy more customers who will stay with you for longer. Great example. And then other sort of clear software businesses are when anything where it's just like you need a lot of money to get started, right? Where it's like if you're building, a large language model, you need chips.
Or anything hardware.
That's why it's like people's jaws are hitting the floor when they see like there was a startup out of Paris that raised like 100 million or something like 102 million as like their first round of financing, and everyone was like, "What the hell's going on?" Well, it's like, well, actually, that business needs that money to even begin. So, pretty much anything like that, unless there's anything like that, you don't need venture capital. Like, you really don't.
Yeah.
And I would argue, everyone, we kind of live in this world where it's like, that's the shiny object. How much money you've raised is way more important than how much revenue you have. And I think that's so stupid.
Or just like what you're building in general, like the impact that it's going to have on like people.
Sure. I mean, we could sit here for days talking about, the negative side effects of capital, right? But, I think the reason why I think it's so dangerous, particularly for younger entrepreneurs who haven't gone through a bunch of cycles, like us, is you think that's the scoreboard, and so you optimize for that, right? You optimize for setting up your business and creating the right team so that it fits the perfect mold of what VCs want. And I think that can be a really brutal cycle because the hard reality of, the VC literature sets it up so it's like, okay, if you check these boxes, you'll get funded. And the reality is that's not it at all. I can't tell you how many entrepreneurs have been so pissed off when they see it's like, one of my competitors who is half as far along as I am just raised at 3 times better valuation, 3 times the money. It's like, if you play the VC game, you're going to get disappointed very fast. VCs, first of all, and there's the negative side of that, and the VCs just, they don't play the games well. It's a very, VC is not a meritocracy as much as people want it to be. It's mostly a who you know type of thing. And there are good reasons and bad reasons for that, right? I don't want to paint a picture that VC is just this, old boys club. It's not. There's a lot of reasons why things are the way they are, and they get criticized, and actually, like a good example is like the WeWork guy. He just raised $1 billion for his new startup when they didn't even really have a product yet. So WeWork, $47 billion. This guy, very charismatic, visionary founder. He took $1 billion out of the business for them to basically say, leave, you're too chaotic. He walked away with $1.5 billion. The business went bankrupt. Right? He's now starting a new company that's basically WeWork, but for residential housing. He raised $1 billion. So people would get pissed at that and be like, he destroyed $47 billion of shareholder value. Why the hell does he get to do this?
Yeah.
But in reality, it's like he's seen probably more things than anyone in that world has seen.
Yeah.
He probably understands how do you build a community like residential space better than anyone. Whether you like the guy or not, whether you like the fact that he burned $46 billion worth of capital or not, that's the truth. So,
The first thing I think of is like, remember that like Joker scene where like
I see
they,
flames
yeah,
behind him.
Yeah, he's like blowing up the hospital.
But it's just another example, and all that is just to say, like, so much of VC, if you try to chase it, can be exhausting. Like, anytime I talk to a founder who's fundraising, they have not slept, they are pissed because VCs who know nothing about their business are judging it and telling them why it's going to fail, and they're like, no, we know that's not going to be the reason, it's actually going to fail for a different reason that you didn't see. So the point is, it's like, unless you fall into one of those early camps, like, I would actually avoid raising money if you can, and then I would try to get as far as you can bootstrapping. Any good founder will reach a point where it's like, okay, there's this huge opportunity in front of us, we could continue bootstrapping, but boy, we'd move a lot faster if we did. Great, that's a good indicator that you should try to raise money. But I think beyond that, you really don't need to. And the issue is, what people don't see with VCs is you sign your future in blood, right? And what I mean by that is, if you raise money and you find out your business is not one of these huge outcome potentials, like, you've wiped most of your economic opportunity off the table. And there's a lot of reasons for that, but the main one is VCs have something called a preference, so that when you raise money, they get their money back first with change before you or anyone on your team takes anything out. So, the point is, it's like, all the money that you raise, you need to pay back with interest before you take anything out of the business. And, like we saw in this past cycle, so many companies, because money was cheap, they raised so much money, and the problem is, when the next time came around to raise money, it wasn't there. They needed it to keep going, so they had to make this tough decision: do I raise money and get diluted by like 80% and keep the lights on, or do I try to panic sell the business or anything? So point is you lose control of your destiny as soon as you raise money from other people, and that's really important for what I just said. But also, I think so many people get into startups not actually understanding how difficult it is. And you hear it so many times. You see so many podcast articles of people being like, if I knew it was this hard, I would have never gotten into it. And any entrepreneur will look at that and be like, who cares? I'm going to do it anyways, which is great, and why entrepreneurship is the greatest force in the universe. But the reality is, it's really fucking hard, and some people don't have the longevity to stay working on one thing for 80 hours a week for a decade plus. Very few people are built that way, and so if you want to say not do that, if you want to run a business that you completely control, but you don't work that hard, or you want to just make decisions on your own that nobody else doesn't really, that you don't have to ask permission for anyone else, like, the only way to do that is to bootstrap. And so, if anyone were to ask me today if I'm starting a company, if I'm raising money, I'm going to say I'm going to avoid it as long as I possibly can.
Yeah, I mean, I've seen some crazy bootstrap stories. Like, there's this one guy on Twitter named Damon Chen. He created like PDF AI, and there was another one, a testimonial.2, and like one of them's like, or both of them are, one's $1 million ARR, and then the other one's 500K ARR, and he's like,
all bootstrap.
No VC. He got denied from YC like 4 times. It's like
and it's so funny. I see so many examples of that, and I think it's a really important. Like, so many people, I think, lie to themselves in entrepreneurship, and I don't want to judge anyone. Everybody has their own motivations for getting into it. Like, I talked about getting into this space purely out of financial insecurity, right? Like, if you fall into the camp of like, I'm doing this to make money, you should 100% bootstrap. Like, almost, and that seems counterintuitive, right? It's like, when I raise VC dollars, like, I'll be able to pay myself and do all this stuff, and it's like, that's true, but it's bootstrapping founders tend to take more out of the business, obviously because they own more, but on average, if you are building a lifestyle business, the odds of you making, I think it was like $5 million or more. I'll try and pull this reference for you guys, but it's like the odds of making $5 million or more are way higher if you're building a lifestyle business that you don't raise capital for than it is to be a venture-backed startup. So to anyone out there who's like, I'm doing this for money, and there's no shame. There's a lot of amazing things that have happened in the world out of pursuit of financial wellness. Maybe reconsider if you think VC is the path for you. I would say if you were like, the world needs to fundamentally change, and there's this big thing that requires probably billions of dollars of effort to change over time, like that's a great indicator that your business will need venture capital dollars.
And I'm like, this is just like my opinion as like experience. Like I'm not like no expert or anything. I'm just like student of the game.
Yeah.
And like I really felt for me building and just doing like side projects of like, okay, maybe I think this idea is something.
Yeah.
I actually get a lot of experience out of it where I understand like, okay, this is missing. I'm not, and I get to understand the problem space more. Where I like in a way that I don't have to actually like go out there and work while I'm in school. Like I'm just building these little side projects, trying to put it out there, doing my own little thing. I get to experience the whole problem space and decide, okay, is this VC ready? But like I'm way too far away from that. But it's like being able to have that thought of like, this is a problem space where I feel like it can be VC backed.
Yeah, no, I think that's great to do, and then I think on top of all the things you mentioned, that the most important thing that will help you do is just train that muscle of like, I'm going to start something from scratch, and I have to think about it in sort of a first principles way of like, hey, what problems exist, what things actually solve these problems, what problems do people actually care about solving enough to pay me for it.
Yeah, I mean, at least for me, when I was like getting into it, it was like, I was always trying to be like, oh, this is the next $1 billion idea, but I would trash ideas before I'd even attempt to build it or like see what the problem is. Basically, one thing that I found was that once you're curious about a space, the problems will kind of come to you. You know what I'm saying? Like, that you'll start to be able to identify the problems versus if you're just like kind of like a sideline and you're trying to find a problem and you're trying to like, I don't know, that's at least how I found it. Like for me, I don't know how you think about it.
Yeah,
and I'm just a rookie, so like
that's 100% true, and that's why it's like VCs are always looking. This will manifest in a couple different ways. Like VCs, they always look at teams that have deep experience in the field that they're in. We're always looking for people with unique insights, which is basically, have you worked long enough in a space to know something that others don't? Whatever it has you, because point is, we like experience because it really does matter. Like you, as an entrepreneur, your day job is, you're interacting, outside of sort of fundraising, right? You're interacting with your customers on a daily basis, and then thinking about what do I need to build a good business, and you're constantly doing the calculus between those two things. And so, you as an entrepreneur, especially in the early days, you're making thousands of decisions almost every single day. Yeah. Right, about the product, about how you're going to talk to your customers, about all these different things that you're going to do. And the people who and again, the name of the game at this stage is 100% speed and speed of execution. And the people who move a lot faster and have a higher degree of hit rate on their ideas are the people who just have been around a problem long enough, right? So it's like, I don't want to say it's a prerequisite. I mean, there are so many examples of people who have started companies in spaces that they have never worked in and have done great, but
the rate of success seems to correlate with that.
Yeah, and that's certainly true with my companies that I've invested in, right? So, a good example that comes to mind is a company called She Matters, where the founder, Jade Kearney, the company is essentially it's gone through a couple of iterations, but right now what they're doing is a cultural competency care certification program. Okay. Starting with OBGYNs and postpartum care doctors. And the idea is that Jade started that business because she had given birth a couple of times, had noticed that she was having real issues with postpartum depression, and what the doctors were telling her were not resonating with her. And as a Black woman, her standards of care and how she approaches mental health and just overall care were very different than what the doctors were used to and catered to. And of course, there are horrible statistics for Black mothers that she was a part of in terms of survival rates and that kind of thing. And so all that she's obviously the business is great, and she's obviously a great example of a potential user for what her company does. But I'll just say it was so important seeing that because she, that business was completely different than what it is now. Like when we invested in them, they were basically a box subscription company that sold like T-shirts, and they were doing something like you could purchase a box on behalf of somebody, and if you did, you'd pay for a mental health treatment of one black mother, and it was just like a totally different business. Mm-hmm. Now they do huge partnerships with huge hospitals that they go in and like train and stuff. And they started as a consumer company. So obviously that business had to reinvent itself a couple different times, right? And I remember there were times where it's like there were a couple weeks left of cash and just a bunch of crazy shit. Yeah. But the point is, they had to make a lot of decisions where they didn't have a lot of information to go on, right? Just here's what I think we should do. With the business on the line. And I would argue it's Jade's instinct for the problem, having lived it herself, but also having spent a bunch of time with her customers, that got her out of that rut, right? Whereas, I'm sorry, if there were two white, not that they ever would, but if there was two white dudes out of Stanford trying to start that company, there's just no way, right? So, I do think it is really important to just, again, if one of the big predictors I see at early stages is speed and consistency of good decisions. Obviously those tend to go up when you have a lot of experience or insight in what you're doing.
Mm-hmm. So we gonna continue with after you dropped all those gems, continue with the shitty startup ideas. That's good. Keep going. All right. So this one's I'm gonna go with the third one. I'm gonna go back to the same one, but this is we've been seeing, I feel like, a dopamine detox kind of trend. And I saw this one thing was called the phone jail. Again, I feel like these direct to consumer products definitely not going to be moving but I mean, what are your thoughts? Phone jail, dopamine detox timer, or something like that. I'm talking about more of the space, right? Like the movement of we've had the movement of getting away from your phone, and it's almost been kind of like a, I don't know. It's it's kind of like the organic when organic shit started popping off. You know what I'm saying?
Well, I think it's this larger trend of just people being more health conscious.
Yeah.
Habit breaking.
Using data and numbers and other tools to optimize that. So, we actually invested in a company that does this.
Oh, for real?
Techstars. It's a company called Unplug, and they're basically it's actually pretty neat. They have a little, it's about the size of a tile, if you've ever seen those little tiles that help you find your shit.
Yeah. I got 6 of them on one key.
Yeah, so what happens is they give you a little device, a little tile that you can set it up in the app to say, here are the apps that I want to block myself from, and you can set it on different times or varying schedules, right? And the only way you could break the lock is if you tap it with the phone. And so their thing was never we're never going to force somebody out of their apps, but having a tasteful level of physical barrier that they need to overcome. And, they have different things where it's best practices are stick this key, the key at the bottom of your bag. So it's you really need to fish for it. Or
throw it out the window. I'd probably give up, just be oh, yeah.
So, but their whole thing is tasteful amounts of friction. So, one thing with that company I've learned is it's a real problem that people want to solve, but with all things, let's just call it what it is. With all things addiction, it's a very hard thing to treat because the only person who's actually going to be able to treat it is the person who has the addiction.
That's facts.
Right? And oftentimes those are not people who want to solve the problem, right? They want to, but they don't. Yeah. And so, I think it's something that's you have a native churn issue that has nothing to do with the quality of your product. It's just the user and the type of problem you're going after. So from a business perspective, it's actually a hard thing to make money on.
Yeah.
Because
I feel there's a lot of what is it, productivity things coming out. And it's
when you're trusting the problem, the person to solve the problem, so it's kind of hard.
Yeah, so I think, on this space, definitely, do people want to spend less time on their phones? 100%. They do.
Yeah.
I think the form factor and how they do it is the hard thing. Like we got to find a way to like make it so either you aren't in control over the settings on that, or I don't know. Like I kind of think there's nothing right now that makes me think we're really gonna solve this problem.
It's like we're fucked.
Like, okay, I'm sorry. When it's like I don't see any real answers, but I do see some things on the other side. It's like we're gonna do VR, and then we're gonna stick chips in our heads, so it's all the fucking time. We're gonna
Dude, I was watching like the Casey Neistat video of him like walking around with the Apple Vision Pro, and I was like, oh gosh, once I start seeing that
once
everywhere.
those things get smaller and lighter, that's just gonna be how it is, man. I swear. So to me, it's like, and you know, maybe there's something there where it's like where we can coexist with technology. Probably not. Like you know. So I don't know. I'm not optimistic that can be done with a business very well. I don't know.
Yeah, I kind of fall into the traps of the productivity. Be like, I'm about to pay this for this monthly. So don't give me anything. And then I
swear there's almost like similar to like the AG1 thing. There's like a branding dynamic to that stuff where it's like part of why you buy that is just to say that you bought it. You know?
Oh my gosh.
Like Clara, my girlfriend, she deletes her Instagram.
Oh, I do the same
all
thing.
the time. But she's always on fucking Instagram. So I'm just like, you're just deleting this to tell me that you deleted it. You know?
My roommate deletes Instagram and then it's just on TikTok and Facebook. Facebook.
I know, bro.
Have you seen what parents are watching on like Facebook?
Like, dude, my mom gets caught into the conspiracy theories. Like, she'll come to me, she's like, "Yo, did you hear what this is?"
Anyone who's like the technology issues are on young people or have lost it.
I wanted, because like I've been falling into like doom scrolling on Twitter, but this is where this other idea came from. We talked about this like earlier on like our second episode, and I saw a company that raised like $50 million on an AI girlfriend app. It's like I was like, and so pretty much like an AI companion. You know, I was like, dude, that when I saw that, I was like, ain't no way this is real, bro. Ain't no way I'm paying monthly to have an AI girlfriend. Like I was like, that is.
You know, it's so funny when you look at history of technology. Like, so much of technology is driven by underlying human needs, but almost any point where there's a new technology coming out, almost the first use cases to get explored are sex. Really. The first I'm sorry, the most advanced websites when the internet came out was porn websites. Yeah. First way that internet, digital money was ever sent or received was for a porn website.
That's crazy.
Like it's, so. To me, to sit here and say that it's not going to be a business is probably foolish. There's probably going to be a couple of those things that get created. Does that make me happy for the world? No.
I'm pretty sure Naval Ravikant, I might be way wrong, but I think he invested into this AI company. I was like, man,
this is one of those sort of things where it's like, it's probably inevitable. It's going to happen.
Yeah, that's facts.
I don't like the projected effects of society on it, but it's one of those things where we'll just have to wait and see. I mean, I'd like to think that we'll never get to a point in my lifetime where it's truly like, we're doing the Blade Runner thing where it's like you have fully robot girlfriends and that's just fine. But who knows? I didn't even think ChatGPT was possible 2 years ago. So.
Yeah. Now this is the last one. I wanted to get your ideas on this. So this was something me and my friends talked about, and we called it like rabbit hole. We never ended up actually building this, but I just wanted to get your thoughts. So this would like allow you to take notes with collaborators on research papers. So if you're doing some research, and it would give you AI search suggestions to allow you to dig deeper, which is the reason for a rabbit hole. Because we were looking on space, and there was nothing that allowed you to cross-collaborate while also diving deeper. So I wanted to get... This is kind of my idea that I'm just trying to get free game on.
This is the one I would spend the most time with out of all the ones you sent over. Look, I think there's a real... for the longest time ever, search was you never would want to start a company there because Google was just such a good product.
I mean, Arc. Have you heard of the Arc browser or the Arc
I not Arc, but I've heard of like Obsidian and Roam and there's a lot of these different browser tools that really I thought were good, but nothing that would make me shift off of Google.
Yeah.
Right? But now we have this unique window in time where I do think Google, the tide's going out and Google did not have its bathing suit on. What analogy?
I just thought it's a crazy analogy.
Well, but seriously, it's like they have built this monopoly business that has some of the best business model, best margins, best cash flow machines ever that is totally under threat right now. And they are pushing hard. Both the Google founders are back in the business building technology. It's the first time this has happened in almost 20 years, right? So they are shitting themselves right now. And so I think there's going to be a lot of chaos and stuff. And so basically the rules are being rewritten on search. We're going away from the 10 blue links into, real answers, and we're going into an answer machine. And so what that's going to cause is that's going to cause a lot of just different consumer norms and behaviors. I mean, think about it. It's like when we were kids, our portal to the internet was Google. We would just start like anything. Like, even if you know where you were going, right? Like I always loved playing those like addicting games as a kid.
Yeah, Pop Tropica.
Right. For the people one generation above us, that was not the case. It was a landing page. It was like Yahoo. It was obviously you could search and stuff, but search was not great. It was you would navigate the page. You'd see what are under the sports section. Here's ESPN and everything. Right. It was a repository. Right, it wasn't a search engine.
It's like going like the Wikipedia rabbit holes.
Right, and obviously the interface and the ways that people use the internet were very different then. And I think now that we go from repository to 10 blue links to answers, how people go about finding this will be very different again. So, in terms of like historically, I've been very like you're never going to beat Google. You're never going to get people to switch their search patterns. Now I am looking for people who are like, okay, because Perplexity, Google, ChatGPT, it's an answer machine. Here's the new workflows. Here's the new interface. Now, if you're pitching me something that's like, here's a smarter way to search to get 10 blue links, like, no, I don't care. But, I imagine if we're just being served answers, there will be a whole new set of tools to like manage that and. How to, like, one thing, for example, that I think that I'm getting more interested in is, like, as we go down answer rabbit holes versus links, being able to travel with people, I think, through their information discovery journey would be interesting. So, like, we invested in a company out of our Filecoin cohort that would actually let people... So it would create really fancy visualizations of like almost like a social graph of like where you're going throughout the internet, and would enable you to publish those, and people could either like ride shotgun and see how you navigated the web, or just get access to that graph and see how you traversed it. Okay. And so like the use case there would be I'm somebody who's gotten really into like the Ukraine war, for example, and I'm always skeptical about the information I'm getting because you never know what's propaganda or what's real. And so for me, it's like there's a couple of people I follow on Twitter who I think are really smart and have a pretty good hit rate on posting good stuff. So I would like to see how they found their information and like how I could use that in the future. So it's like, to me, those types of businesses, I always thought were cool. I would never invest in. Now I've definitely changed my mind.
I think it's like always good. I think like now with the way ChatGPT is giving you just answers straight up, now we can allow to see, follow like where do we start? Where does this thinking start? Because I feel like that's always the hardest thing to start in anything, like to understand the startup world, understand the technology. It's always like, how did you get here? And I feel like being able to allow a guidance through kind of like a jungle of information. I feel like it's like game changing and something that Google. I'm sure they're trying to do with BART. BART.
Now we haven't talked about how do you actually build a business on it? It's a great product.
Yeah.
How do you actually build a business?
Yeah.
I don't know the answer to. Like, I think that's why Google's freaking out. Is they've had this money printing machine that fits perfectly with the 10 blue links. We'll pay all of our customers against each other and see which one's going to put the most dollars to be at the top.
Yeah.
Like, obvious business model there. Now that it's answers, and a lot of their business model was kind of being their product of being information discovery was kind of counter to their business model, where they could actually you could pay to be at the top you could pay to be the best source of information. So now that obviously AI is changing all of that. I actually think it'll be a really positive force for the world, because it'll just be a focus on who's right, and lower forms of advertising will no longer be a thing. But
you don't think answers would be people would pay to put their kind of resources out there? Because I know
let's think about it this way. Like Google today, in order to be at the top of like SEO, right, which is organic, or search engine optimization, or even like is it SEA, advertising optimization. There's the organic, and then there's the advertising optimization. A lot of those are driven by keywords that you use in your website. So how many times have we heard people be like, I'm going to put white font on my website just to boost my page rank score or something.
I heard that about resumes. I've never heard about websites.
Well, I think it was more a practice in the older days. I think SEO has gotten a little more sophisticated. But the point is, they will do things to their website that aren't necessarily give me the best answer in order to be at the top of the list, right?
Yeah.
Now, I think that it's an answer machine instead of a link machine. It'll be who has the best information. And it'll cause everyone to, if you want to be recognized, if you want to be, if HubSpot, for example, wants to, make sure they show up when people put out, what CRM should I be getting? It's like, they'll need to put out, the best product at a given price for ChatGPT to recommend them, not because they put out some blog and did a bunch of good SEO that put them first,
But because they have a legitimately good product.
Because it's like you're going to be forced. It's like if you want to be the best answer, you got to be the best answer. If you want to show up, you have to be the best answer. So I think it'll be a net force for good everywhere because of that.
I agree. Yeah,
but it's definitely going to make there's some statistic where it's like, that's the other thing is I think it's going to be a lot harder for companies that are marketing. Those ad platforms are such a huge part of your distribution, where if you take that away, right, what are you gonna do differently? I think that's a really interesting question. Is like, if you were reliant on the 10 blue links model for the distribution, how are you going to adapt? I think that's something that.
All right, so you're taking your next step in your venture career here. It's a big one and super, super sweet. So tell us about, you're following your mentor, you're doing something together that I think was always the end goal for you, but expand upon it.
I'd like it mad young too.
Yeah, and you're doing it at a very young age. It's crazy cool, and moving to the Big Apple and everything, getting exposed there. But I'm curious, venture right now is sort of at a low. We've seen it at its highs, especially when me and Ahk entered, around just after COVID,
Yeah.
So it's sort of at a low. So I'm curious why you decide to do this now, and I'm also just tell us about, I guess, your thesis as a venture, and
Yeah. So as Ryan mentioned, I'm joining the guy who hired me at Techstars, my mentor, a gentleman named Isaac Kato, to join his fund, Two Ravens. So Two Ravens, I'll talk about the name first.
Yeah, talk about the name.
It's so sick. I love it.
So we named it Two Ravens because the guy who hired me, Isaac, who's the general partner of the fund, he's a strong affinity for Nordic culture.
Okay.
This is because he's a serial entrepreneur. He's had he started 2 companies. He's been an executive at 3. He's had 3 successful exits. One of the companies he founded was a green data center in Iceland, and this company was called Vern Global. He was founded and ran that company for better part of a decade. And that company was in Iceland, and of course he kind of fell in love with the country. And so anyway, we have a strong ties to Nordic culture, but our company is called Two Ravens because so Odin, who is sort of like the Zeus, if you will, for the Vikings, which obviously Vikings are huge in Nordic culture. Odin lived in a big sort of silver hall, if you will, and was sort of not very mobile. And so he had two ravens. They have names, but I'm forgetting them at this time. But these two ravens would go all around the world and would capture a bunch of information to bring back to Odin, because Odin wouldn't be able to go around the world. And so these two ravens would tell them stories of like the best warriors, the best new medicines, the best technologies. So the two ravens would go out. The point is, two ravens would go out and find the best stuff and bring it back to Odin. And that's kind of how we think of ourselves.
Sweet. I didn't even think it was. I just thought it was a cool name. I didn't think there was a whole story to it.
So that's the name. Isaac gets all the credit for that. I don't. And so our fund, we started the fund, and Isaac started the fund largely out of this observation we had at Techstars. And that observation was that, at Techstars, we invested out of Seattle, but we were very fortunate in that we would invest in companies and founders all over the world. And we saw some pretty stark differences, particularly when it came to fundraising, depending on the type of company and founder you were. So some of the obvious stuff is, if you're a woman founder, if you're a founder of color, you're getting worse deal terms, you're spending much more time through deals. If you're a founder in a geography that's not San Francisco or New York City, you're just because of that fact, you're worth probably 2/3 of what you could be. There are some of these weird. Basically, we just noticed all these things that were not correlated to a business success at all, that were actually strongly impacting fundraising, statistics, whether that be valuation, price, time to close, probability of close, whatever. And like any enterprising capitalist, anytime we see a mismatch like that, that's something that we want to go and support. And of course, there's and the other thing I'll say is like a lot of those so we're calling these. So to back up, I guess our thesis is backing non-obvious founders who suffer from some of the negative market forces that arise, like I just described. And so that includes immigrant founders, anyone who's not in basically SFLA, New York City, and then founders, women and people of color founders. And purely, as much as we love the mission-driven element of it, we're big proponents of that. This is about making money, right? And the one thing another thing we noticed about in Techstars while doing and why we're doing this is, a lot of those founders who fell under those categories that were having more trouble during fundraising were actually our best founders. So, that's the other thing. And this isn't a DEI fund, to be clear. I mean, our first investment is a white dude out of Iceland, right? But it is much more about what are those things in a founder that automatically sort of the market has deemed them less valuable, that we can sort of exploit and support and use our talents as pre-seed and people who've mentored founders and, in Isaac's case, been a very successful executive and founder, and support them through the next decade plus. So that's the fund. That's why we're doing it. In terms of what we'll invest in, anything software. Anything software that's not FDA or otherwise regulated. So no sort of, mRNA vaccines type thing. But we'll do consumer B2B. I think we definitely have a stronger affinity for a couple of different spaces. So I think number one, anything enterprise transformation with artificial intelligence, and obviously because that's the hot space, but also because that's kind of where Isaac and I have had some experience. So I've worked at a couple different AI startups, and Isaac is an executive at a couple, and sold a data training and labeling business to Uber and their autonomous technologies group. So that's kind of just an area where we have a lot of domain expertise. And then we're also big on games and games infrastructure. Isaac has sat on a couple of big boards of pretty well-known games, and I've always been a gamer, and so I like that. So much more on the infrastructure side, to be clear, not so much on the studio and application side, just because those are little harder things to invest in. And then kind of anything application layer, consumer or B2B stuff is where we especially play with. We'll do like infrastructure, although we typically won't lead those types of things. We're not super technical, and so if we're going to invest in something that is super technical, we'll want somebody else on the cap table who is, just so we're not flying blind. But that's us.
Cool. And then from being an investment manager at Techstars or doing this, what's the biggest, I guess, I don't know, shell shock moment you've had?
Yeah.
Anything you weren't expecting? I don't know, making this like little change here.
Well, I am only I will be going into week 2 on the job. So, and look, I've worked with Isaac for the better part of 3 years, and we took about a year break while he kind of left Techstars a year before I did to get the fund up and running, and so it was a bit of a break. So it's been great to work with Isaac again. But in terms of shell shock, I think nothing that I'm truly like, whoa. The biggest thing is Techstars, because of just how it's structured, it's an accelerator, and obviously one of the big benefits of going through an accelerator is all the things I mentioned before, but also it's almost like a cohort-based learning model, and it's always great to be in a classroom with people who are going through similar challenges that you can work on. So part of that dynamic on the investing side for Techstars is you actually had to construct a class. Like there was a period of which during the year you're recruiting, and then there's a selection period, and then there's an actual going through the accelerator period, right? And you needed to have a class put together. It was on me to get 24 good companies, right? Whereas in this model where I'm a venture fund, I can take investments one by one, and I can say no or yes whenever I want to. There's no sort of timing component. One thing with Techstars that I didn't love was that we really had to, towards the end, almost every year, you get to the point where there's probably like a month left in applications. You have most of the class filled out, but then there's towards the back end, you need to fill those last remaining spots. And so I never liked this feeling of like picking people off of the wall and recess or anything. Or I want to make a decision because I want to make that decision, not because there's some forces.
Don't want it to be rushed.
Exactly. So just the dynamics of funding. The other thing is we're obviously playing at a similar stage as Techstars, but it's a little different. I mean, there's rightfully so, there's a certain type of company that should be at an accelerator, right? Like I would not, if I was talking to somebody about joining an accelerator today and they've, done 6 businesses before and sold all of them and have made a bunch of money, they probably have the network, they probably have the knowledge, they don't really need to go into an accelerator. So I meet with the type of founder that, I'm seeing more types of founders that I wouldn't see at Techstars, if that makes sense. The last thing is, I feel a real sense of ownership. I mean, partially because I do own this thing, but it's for better or for worse, it's my thing that we're starting, and how that manifests in a good way is, of course, like I think at Techstars you would just kind of go with stuff because it's part of a big company and you want to keep your head down and do as you're told. Now, like, I feel really empowered whenever Isaac comes up with a bad idea or company I don't like. Like, I'm going to tell him because I have some real skin in the game now. And vice versa. And so I think it just creates a much healthier dynamic for just doing good work. But on the negative side of that, Techstars was a big company that had a lot of nice people that would do parts of your job that you didn't want to do. Like I am the full-time IT person at Two Ravens. Like I'm having to string together. Like I'm having to build the CRM from scratch. Like stuff that isn't necessarily like doing what I want to do. Yeah. But it's all part of at the end of the day we are also a small business. So it's all fun. It's all good. Techstars, there are parts of it, definitely the part I will miss the most is just the, being part of like a big team, a
camaraderie
community.
kind of.
Yeah, community people. I mean, I love Isaac. He's great, but we're two people. You know, often just shooting the shit. It's not like a big community of people where, you know, like my colleagues at Techstars are so great. You know, Sarah, Jake, Marius, the people who run that program, and you know, all of my other colleagues at Techstars that I had little groups with, and we'd go out for drinks and stuff. You know, it was nice to be a part of something bigger than yourself. You know, certainly true now, but it's 2 people as opposed to 300.
Yeah. And then where do you think is like you and Isaac's competitive advantage? How do you like feed off of each other's energy? Like,
yeah, I mean, Isaac is just he's an OG, man.
Yeah.
He's
the OG.
So I mean,
Built different.
he went to school. He went to Stanford in the early '90s. Like that's the mecca of meccas when it comes to the dawn of the internet age. He was, he was at Summit Partners, a well-respected investment firm in New York City. He was, went to Harvard Business School. He started 3 successful companies. You know, this guy's done it all. And so the fact that I'm lucky enough to be writing his coattails is awesome. And he's somebody that, on top of just having a huge index of knowledge and, Rolodex of people that he knows, he's just a good, fun dude to hang out with. Yeah. Somebody that I think, granted there's about a 30-year gap between us, but somebody that, if he was my age, I'm sure we'd be shooting the shit and hanging out anyway. So that's awesome. And, I certainly don't, I view myself as a sponge right now on this stage of my life. And, at some point in time, I'm sure Isaac will want me to start taking a little bit more of like a proactive role. I'm sure, like for example, today I'm not making any investment decision on my own, and nor do I really want to. Like, I like to think I know a good amount of stuff, but boy, there is so much for me to learn. I can't tell you how many times where, it's like, oh wait, I've seen this in some YC video, or I've read this somewhere, and it's just like, no, you don't know shit. So, I like that a lot. He's somebody who's very good environment to learn. Sometimes he really likes to throw you in the deep end, and that's uncomfortable, but it's great. I think the one thing about he and I is that we're both we're both very, so at Techstars they have you take a personality test. We do this for all of our companies too. I actually think it's a practice that more people should do. But we actually did one with ourselves, and so we did how it works is you take like a Myers-Briggs style thing, and you get to analyze what is your working style versus theirs, based on your scores, where are the risk factors, and he and I are the exact same person on that test.
No way.
Like almost to a T. There's some areas where, maybe he and I here are more or less dialed up in, but while it's great from a personality standpoint, we do need to be really rigorous about, like, we are both the type of person where it's just like, fuck it, we'll get organized later, So like having, whether that's we're going to hire somebody who can just be on top of us getting organized or not, who knows, but, we'll have to figure all that out as we go, but so far it's been great. Yeah.
All right, well, 2 ravens spreading their wings here very soon. Yeah.
See, that's the other thing about the name. When I first heard the name, when I heard the story of the name, I thought it was really cool.
No, the story's awesome.
It maps perfectly to a venture fund, but I was like, dude, you know that if it's you and me starting this thing, everyone is going to call you Raven 1 and me Raven 2. So I'm like really trying to charge hard to our next hire, whenever that will be, so I can get everyone to be like, okay, it's not like 2 ravens because there's 2 guys in a venture fund. It's 2 ravens because there's some lore. Cool. So yeah, we'll figure that out as we go.
Cool.
Oh, well, thanks for having me, guys.
Yeah, thank you, bro. Literally, you're our godfather of the startup game. So we had to honestly bring you on, learn more.
Yeah.
Every time I learn from you,
of course. If you guys accomplish anything, I'll take credit for it.
Well, that's a wrap. That's episode 8.
Yeah.
And so we're gonna call
that episode 8.
Yeah, chugging along.
We've been trying to stay consistent. It's a little side project that we're trying to do. So. Appreciate you, my man.
Yeah, that's fucking awesome.
Yeah. Alright, so I guess we'll catch y'all Catch y'all next time. I do a little peace out exit.
Peace.